Sticking with ways to position, let's turn now to a long-standing Wall Street year-end tradition and look at the dogs of the Dow. Here's the strategy. Pick the 5 or 10 highest dividend-yielding Dow components and hold them for the next year. My next guest has a few picks for 2023, even though this trade, correct me if I'm wrong, Carter, didn't work out so good in 2022. The current dogs include underperformers like Intel and Verizon. As an aggregate, they're down about 12% since January, while the Dow itself is down less than 9%. Carter Worth is here. He's founder and CIO of Worth Charting. But, Carter, I guess if we add dividends into that, is it almost just about even?
Well, that's right. And it's a great follow-on to your conversation about yields. At the end of the day, we know that long-term investing, if you look at any long-term chart of the S&P or the Dow versus a total return, half of your returns on any rolling 2-3 year decade process is from yield. And so the dogs of the Dow, while it's a sort of a clever name, and there's actually an index, if you can believe it, called MUT, M-U-T is the ticker. It's basically making the case that it's not buying stocks that are actually dogs that are down. For instance, this year, Chevron is a dog of the Dow. It has one of the higher dividend yields, and it's up 46%. It's picking the 10 of the 30 Dow Jones Industrials with the highest dividend yield and then holding them for the year ahead. Verizon, perchance, has the highest yield of all at almost 7%. But two that are worth looking at here, to my mind, to my eye, Amgen and Cisco. And each, from a technical basis, is quite compelling. And they're very different circumstances. Amgen was a strong stock this year that's now dipped, and I think you take advantage of that, whereas Cisco has been a weak stock that's bottoming. There's the Amgen chart now on the screen. And so you're talking about a breakout to new all-time highs. That's a fairly rare thing right now going on in the market. And now that check back, that dip, that pullback, that correction to support, I think that's an entry point, a buyable moment.
So by focusing
on...
sorry, Carter, on Amgen and Cisco, does that mean you wouldn't recommend the strategy as a whole, buying all of them and holding that for this year? Would you say to investors maybe just those two?
No, I kind of like it. I mean, I think if we are in an environment where the markets are not inspiring to the upside, and I think that's a euphemism to say I think we're either sideways or down. Let's just say that we're not so sanguine, all sorts of phrases one can use. I think yield will be important here. And so I would take a crack at the dogs of the Dow by owning the basket. But two that come to mind, Amgen being one and then the other, Cisco.
And Cisco is a little bit different story. So final word there, because I don't want to waste your precious time talking about Tesla again, but wow. Is there anything to glean from the fact that Tesla and Apple's now hitting a 52-week low? As we, speaking of the Dow, that one's probably a little bit more relevant. Do you think this trading action is emblematic of something? Is it just a year-end flush? Like, what's going on here?
Oh, I don't. Well, each stock has got its own circumstance, but let's talk about those too. And Apple is perhaps the most widely held of all. It is the largest cap, and it is loved, and yet its day-to-day action couldn't be worse, right? It's right at its June low, and the presumption is it will break its June low, just as the stock market did and many stocks did. Tesla's an altogether different circumstance. I myself, we have reversed the long-standing short call and taken a shot on the long side. It's not working as stock's getting hit today. It's one of the most extreme readings. And what we do know is that even on the way to zero, whether you're Enron or WorldCom, you get big bounces. And so while there's every possibility that Tesla can work a lot lower, we think it's very extreme reading, and one can try to make some money on the long side.
All right. And Apple?
Oh, just free to move lower.
Yeah, okay.
Free to move.
Oh, jeez.
Yeah.
I don't like that. You have an elegant way of conveying very bad information. Carter, it's great to have you here today. We appreciate all your time. Carter Worth with Worth Charting.